heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we bring you the latest in markets as Nvidia struggles. We're going to talk macro and micro with Nancy Curtin from LT Tiedemann Global.
Plus, we have the latest from Washington as the Supreme Court sends social media laws back to lower courts.
And Qualcomm has become the new front-of-shirt sponsor for Manchester United. Are chips the new crypto? We discuss that and so much more throughout the hour, but first we check in on these markets. And we're struggling for direction, I think, can be what's really the read across. We start the new half of the year, and we're up about 0.1% on the Nasdaq more broadly, but it seems to be the bond market that's dictating some of that caution in the equity market. Yields push higher, some 8 basis points. Read that what you will. Is that caution as to what's happening over in Europe? Is it worries about what's happening in the United States in terms of ultimately fiscal spending coming with whoever runs the country post-November? And I think also what's happening, though, is the political risk, actually a bit of a relief over in France. The CAC 40 rising more than a percentage point as we do see perhaps a push to curtail what might be the most right-winger policies that could be enacted over in France as many rush to see what happens in the second round of voting. We look at the economic effect, not the political. Let's have a look at what's happening in terms of crypto, though, because the risk asset of choice here on the Technology Show, we're up 1.4%, 62,755. A bit of a risk-on attitude when it comes to Bitcoin, Ed, but way off our highs of previous. What are you watching on the micro?
There's a lot going on throughout the hour. Let's start with Nvidia. A headline hit just before we came on air from Reuters, citing anonymous sources that French antitrust regulators are getting ready to charge Nvidia over anti-competitive practices. You'll remember in September, those dawn raids in Nvidia's French offices or facilities. We'll continue to track it. I'd point out the stock is off session lows, and broadly speaking, chip stocks are lower anyway. There's been some selling across the Philadelphia Semiconductor Index, but we'll continue to monitor that one. Tesla's going to give us second quarter delivery numbers at some point in the next 24 to 48 hours. We'll go to Craig Trudell and preview those. And then there's the Qualcomm Manchester United front of shirt sponsorship tie-up. It says Snapdragon, and we'll show it to you later on. By the way, it's July 1st, so happy third quarter to you, Caroline. Happy second half of the year. We got a data guy at Bloomberg Technology, Terrell Holt, and he's put together this fantastic chart. This is the S&P 500, and at the start of the year, the first half of 24, the S&P 500 is up about 14%, right? So he went back and crunched the numbers. Where the S&P 500 has risen by double digits in the first half of the year, more often than not, it's gone on to have some pretty big gains in the second half of the year. So that's kind of the question, right? What happens next as we enter this second half of 2024? This chart, based on history, would indicate we continue to climb higher. Do we? Who knows? Well,
there's someone who might well know, or at least can align our bets a little bit clearer. Nancy Curtin, Global CIO for LT Tiedemann Global, which manages $70 billion in assets. And Nancy, you're such a voice for us when it comes to artificial intelligence, whether it's hype or reality. And I'm interested as to whether you think the second half will bode well if you're long some of these names like Nvidia and the chip stocks.
Well, look, trees don't grow to the sky, so we need to recognize that these stocks have run a lot already. Having said that, you know, Nvidia's got a lot of its sleeve in terms of new product development, right? We've got Blackwell coming on in 2025. We've got Rubin thereafter. And so there's quite a lot of product development. Nvidia does enjoy a competitive moat in both software and hardware. And I think we're just beginning of the purchase of these GPU chips from governments and other sectors like healthcare, the automotive sector. So look, at the end of the day, when a stock has risen 150%, there can always be a pullback. But I would say we're still pretty early innings here on the Nvidia story.
Nancy, we've done a lot on the show of late about how difficult it is, particularly for the sell side, to forecast top-line growth. You talked about Blackwell coming online. But you're in the camp of people that says Gen AI is going to change everything, but it's not yet priced in. Which sectors is it not yet priced in for? Where is that not yet being reflected?
Well, I think given what we've seen in the first quarter and the second quarter, in particular the United States, the second quarter all led by the Magnificent Five, so to speak. You know, Apple and Tesla obviously lagged a bit, but it was tech, and tech. And so I would say that Gen AI has been priced in to a certain extent to those stocks. They certainly are recognized as Gen AI beneficiaries. But I think the interesting thing is, Gen AI is value added across every sector of the economy, or at least that's what we think. And therefore, looking ahead, we think Gen AI and its implications for innovation, cost savings, productivity improvements in other parts of the economy is not yet priced in. And in any event, our view is that earnings growth will broaden and deepen as the year progresses. It's still about tech in the second quarter, by the way, but as the year progresses, and we think that will lead to a broadening in market participation. So actually, many of our managers, remember, we're open architecture at Alt Tiedemann, have been reducing technology to the benefit to other sectors of the economy that will over time benefit from Gen AI, but also we think we'll see an acceleration in earnings growth as the year progresses, and frankly, trade on a more attractive valuation.
Really important when it comes to publicly traded equities, Nancy. But what's so great about you is we can go cross-asset as well, and to private assets and to non-public companies. It's interesting, we recently had Yama Crossing Capital Advisors head on recently, who've done a partnership with Alt Tiedemann to look at, well, private companies from an equity perspective, but you're looking at it from a debt perspective as well. Where should one be allocating into technology or more broadly?
So in technology and more broadly, let's just take private credit by way of example. We think private credit is super interesting because there's a retrenchment happening on the part of the banks. Now, you all saw the stress test last week. Banks need more capital. Basel III will be punitive in terms of ongoing capital requirements. There's mark-to-market pressures on bank balance sheets. And of course, small to medium-sized banks, commercial banks that have very high exposure to the commercial real estate sector have been withdrawing from lending, not to mention funding costs going up. Okay, so what's happening here? Banks are retrenching from lending, but marquee credit names are coming in and filling the void. We initially invested in what I'll call private lending, direct lending strategies. More recently, we're evolving and moving into what I call asset-backed lending strategies. Again, these are kind of almost investment grade, or in another name, investment grade, senior secured, high up in the capital structure, and direct lending is about a 2% premium to high yield, whereas asset-backed lending is about a 4% premium to high yield. And by the way, these are being offered to wealth channels in sort of semi-liquid form, so it's not hugely illiquid, and that's important as well.
Nancy, how is a presidential election in the United States going to impact the technology sector?
Wow. Well, the presidential election in the United States got rather entertaining last Thursday in a sort of cringe way, dare I say. We've got a long way to go here before we know whether either candidate or obviously if there's a replacement for Biden remains to be seen. But look, I think tech companies remain strong. Neither candidate is anti-tech. They both recognize this is a significant competitive advantage to the United States. I don't see IRA or the CHIPS Act being rolled back under either candidate, clearly not if President Biden wins. And these are all important supports for the tech sector. That, in addition to the fact that these technology companies, are spending huge amounts on Gen AI, $200 billion, the four largest tech companies. Of course, their capex is Nvidia's revenue. And so we think that continues irrespective of who wins the election. This is a sector that's not really impacted by the election. This is a real secular trend here.
Nancy Curtin of Alt Tiedemann Global. Just incredible breadth of conversation. Thank you. Let's turn back to some of the breaking news that happened out of Washington in the last hour. The Supreme Court out with multiple decisions this morning, but let's start with the ruling on immunity for former President Trump. Joining us from D.C., Bloomberg's Kaylee Lyons. Wow, you had to process a lot of information in a very short period of time. The immunity decision, please.
Well, the immunity decision is a partial win for Donald Trump and a partial loss. Essentially, what the Supreme Court has ruled is that Donald Trump is immune from prosecution for official acts that he took while in office, not, though, for unofficial acts. And this court, in a 6-3 ruling, the conservatives ruling in the majority, the liberal justices dissenting, has essentially set this now down to lower court, specifically Judge Tanya Chutkan, who is overseeing this case brought against him here in Washington related to 2020 election subversion. It will be up to that lower court to decide what is an official and unofficial act within these 4 counts that Donald Trump has been indicted with. Effectively, what this accomplishes is not only setting a precedent for all future presidents of the United States, as this is not just about Donald Trump, but about presidential authority broadly. It also, though, effectively makes sure that this case will not go to trial for Donald Trump before the election in November. Judge Chutkan has said that the parties will have at least 3 months to prepare for a trial. And of course, all of this official versus unofficial matter will have to be sorted out as well. So effectively, this does provide a win to Donald Trump in delaying that trial to the point where it likely will not happen before voters make their choice between Donald Trump and Joe Biden in November. Donald Trump, of course, has spoken on this today. He calls it a big win for our Constitution and democracy. And said on Truth Social, he is proud to be an American.
Kayleigh, you're busy. The lower courts are busy. The lower courts are going to be busy thinking about social media as well. New laws that wanted to be put in place in Texas and Florida go back there too.
Yeah, this is an interesting and complicated opinion that the court also handed down today related to these laws that both Texas and Florida as states have put into place, restricting social media companies' ability to restrict content on their platform. Essentially, what the court has ruled for is that those courts need to have their cases thrown out and relook at the First Amendment question here, which, of course, is really the crux of this case. What does and does not violate the First Amendment rights given by the U.S. Constitution? So they're effectively kicking the can back down, not making a decisive ruling, just as they did similarly in a separate social media case ruling earlier this term, in which they essentially handed a win to the Biden administration, not restricting its ability to communicate with social media platforms about content that should be taken down. But in that decision, while it was a win for the administration, they just said that the defendants who brought the case lacked the legal standing to do so. So both in this case today and that other social media related case, they aren't actually ruling on the merits, on that key First Amendment question and what crosses the line as you're trying to combat misinformation but also don't want to restrict the right to free speech. The court hasn't ruled on those things. It's just telling other courts they need to do so again.
Kayleigh Lines, you always break it down so eloquently. Thank you. A lot to digest there. We appreciate it. Meanwhile, coming up, we're going to be turning our attention to the sharing of your cars. Andre Haddad's been at it for a while, CEO of Turo. He's got an outlook on the travel industry and his company's latest product updates. Ed, what have you got?
Some quick breaking news. CDK, which is the software platform that supports car or auto dealers, has issued a statement saying it sees its systems being restored by early July 4th. This is the platform that is front and back office for car dealers that was subject to a hack. Really important. July 4th is a key sales period in the United States for cars, alongside with Memorial Day, Labor Day. So that's the update. The systems will be restored by early July 4th, and that's what we're watching. Stick with us. This is Bloomberg Technology. Let's talk about technology, travel, and the transportation industry and how Turo is trying to disrupt it. The company recently shared over 70 product updates, aiming to make the rental car experience smoother for consumers. Here with more, Turo CEO Andre Haddad. So, normally, you would say, I'm going to go to a certain place, and I know the date I'm going, and then I'm going to try and book a rental car. You've decided one of the things you want to change is that process. You want to pick the car and then work out the location and date later. Just explain how that's going to work in practice.
First of all, thanks for having me on the show. We're very excited about what we're calling our limitless search capabilities. Just to give you a bit of context, the business has grown quite a bit over the last few years, and now we have over 370,000 active listings across 1,600 makes and models. And many of our customers have been asking us, well, it's great that we can search by destination and date as if I am already keen on going on a trip and I know what my dates are, I know my destination. But I'd like you to show me all the great cars that you've got.
So it's more experiential. It's
more
this idea you might want to take a luxury car,
exactly,
or try an EV for the first time,
exactly,
something like that.
Exactly. So Now we've reached a critical mass in all of our markets that we thought this is the moment in time when we can launch this capability. So now if you're looking to, experience that Cybertruck, or if you want to, maybe test drive a Rivian before you buy it, you can actually find all of these Cybertrucks and Rivians across the country, and then you can decide where to go in order to do that.
It's interesting that you bring up Cybertruck, and it's interesting that at this moment you're also putting out a note trying to describe what the future of transport looks like. And you've really articulated how Turo has been through the highs and the lows of the macro headwinds of COVID, of then everyone wanting to get back into revenge spending. We're also now looking at, ultimately, robo-taxis. How will Turo still survive that pivot in the future?
You're right, Carolyn. It's been quite the roller coaster the last few years for travel and transportation. COVID hit in 2020. Then, of course, there was the collapse of big rental in 2020-21, the return of travel, the revenge travel. But also, the automotive industry has been changing quite a bit over the last few years. Yeah. And as you know, there's been tremendous inflation and the costs of car ownership and car insurance recently. So within that roller coaster of a ride over the last 3 years, we're very pleased with our performance as a company. We've increased our revenue by over 400%, from 150 million in 2020 to 880 million in 2023. We've increased the reach of our community of hosts and guests, so we're very pleased with our performance. But it's not the end of the disruption. The disruption continues in the space, and we're very excited to be part of this new class of companies that are helping evolve the transportation and travel industries. We think actually autonomy is a great thing for the industry. We see the future where we have a lot of these, ride-hailing short trips being delivered by autonomous services. Our business is much more related to much longer trips. Our users tend to book a car for 4.5 days on average, and they drive almost 200 miles a day. So this is a segment that is, I think, independent of the evolution of robo-taxis.
If you look at third-party data, are the bigger player of 2, maybe 3, get around. There are some others out there. You've just talked about how much your business has ramped up. So as is tradition on Bloomberg Technology, when a founder CEO comes in, how's going public going, and when's it going to happen?
I thought we were going to talk more about the 70 product releases today.
We talked about one of the 70 in quite a lot of detail, but it all points to the idea you've got momentum, and there's a lot of interest in you guys for that reason as well.
Yes, we're ready to go public. Our S1 is ready. We've updated it a few times already, as you know, over the last few years. But as you know, the financial markets have not been very keen on IPOs over the last couple of years. So as soon as that changes, I think we're going to be ready.
Andre Haddad, Turo CEO, as you know, I've been a user of Turo, not just in the United States, elsewhere as well. And it's that experience bit that maybe we'll try out next. Thank you for coming on the program. It's time for Talking Tech, and first up, Bridgewater turns to machine learning. The hedge fund giant is set to debut a new fund that will use AI as the primary basis of its decision-making. According to sources, the fund will debut with $2 billion of capital starting today and will utilize models developed by OpenAI, Anthropic, and Perplexity, among others. Plus, Japan's H3 rocket takes flight again. The Japan Aerospace Exploration Agency saw a successful launch which carried a satellite toward low Earth orbit. It's the second launch for the H3 this year with no crew on board. The flight comes after numerous blunders and delays for the agency, including an explosion of its smaller Epsilon rocket in 2022. And Amazon calls from an AI startup. The online retailer has hired top executives and employees from Adept AI Labs in a move that bolsters the development of an advanced version of AI that can think like a human. According to a memo provided to Bloomberg, Amazon will use Adept's tech to develop products that help automate software workflows. Caroline.
Well, these acqui-hires are interesting. Meanwhile, look, let's go to France, because following months-long battle over the future of the French IT firm Atos, it is once hailed as the rising star of the country's tech industry. Well, now creditors are set to take control. of the company. Joining us, Bloomberg's Irene Garcia Perez. And you really look at the company from a distressed debt perspective.
That's correct.
Boy, was it distressed. And now creditors are the ones that are going to be the savior.
That's right. It's been a months-long negotiation. The company started to discuss the situation with creditors in February. And we're nearing, it's July already, and we finally have an agreement in principle, and now it's about other creditors joining this deal.
You know, Rene, later in the show, we're going to talk about UEFA Euro 2024, of which Atos is the official IT partner and one of its main sponsors. We were reflecting off air that, this has been a wild battle. It's been a really difficult and ongoing situation. Even our producer, John Hyland, was like, when does this end? You know, we've been covering this for a while. Is there a kind of line of sight to what happens next?
Well, the restructuring should be wrapped up by the end of the year. What happens next, once the company has enough creditors agreeing to this, signing the lockup, they start a court process called the ASC court in France to start an accelerated safeguard, which allows the company to cram down dissenting creditors, if there were any, and get the deal approved. And that should happen by the end of the year.
Looking at the deal, equity, zilch, zero, goes to nothing. 2.9 billion euros of loans and bonds are turned into equity. 1.68 billion euros of new debt, injecting 233 million in new equity, we understand. And perhaps looking at the deal to sell part of Atos to the French government.
Yes, exactly. So here the main argument is that creditors like the company a lot, and they argue that, well, they will sell it to the French government if it makes sense. Otherwise, they're happy to keep it. They don't have any intention to move the headquarters from France. It will still be a French company, even if the revenue, actually 90% of it is outside of France. But they plan to, stick to it being a French company. And that's one of the things of the Kretinsky offer they didn't like. They didn't want to split the company. So, the plan for them is we will send operations if it makes sense. Otherwise, we're happy to keep it together.
That was Irene Garcia Perez walking us through what has been a long fought-out battle. Still some T's to cross, I's to dot.
Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
Caroline Hyde in New York. Let's get a quick check on these markets because we're being whipsawed by, political angst, whether it's in France, whether it's in the United States, and yields have been pushing higher. But notably, actually, the Nasdaq has found some resilience today in the face of yields pushing up some 8 basis points in the 10-year. Nasdaq 100 up about 0.1% to start off the beginning of the new second half of the year, and we're up just 0.1%. But remember, we're selling off on Friday. We've got the CAC 40 up 1.3% as we close trade in Europe. We are seeing some signs of, relief post the first round of voting that happened in France and trying to understand whether or not we'll see some of the more significant right policies come into act. We're currently up 1.3%. The euro also just a little bit stronger versus the US dollar. The dollar picked up steam, though, perhaps on some of the political anxiety here in the United States. Move on and look at some of the individual movers that we're looking at on the day, Ed. I want to shine a light on Nvidia. What a topsy-turvy day for the chip maker. We were down some 2%. We were dragging on the big benchmarks. Now we're currently up about 0.3%, even as we get a Reuters report saying that maybe we're getting near an antitrust charge coming from France. We're currently, though, still managing to be resilient on this particular chip name. I'm looking at Chewy now off by 5.9%. Again, a roller coaster ride for this particular name. Online, if you're going to be getting into your food for your pets. But this is all about Keith Gill. This is about Roaring Kitty. This is about Ryan Cohen not only being the leader of GameStop, but is the co-founder of Chewy. And now it looks as though we've got a big open interest, a big long coming from Keith Gill. But it's not enough to stabilize the stock on the longer term. I'm looking at BYD. I'm looking at the American depository receipts for this Chinese car maker. Bloomberg News getting the data that basically we've seen once again some record sales coming from this particular company, hybrid and indeed EVs doing very well. Why? Price cuts were up some 0.8%. But you're looking at EVs a little bit more, Ed.
Yeah, well, I'm looking at Tesla. It's up 6% in the session, which kind of came out of nowhere. That's its 5th straight day of gains, which unbelievably is its best winning streak in almost a year. The company is expected to post a drop in quarterly deliveries, its 2nd consecutive quarterly decline. Bloomberg's Craig Trudell, our global cars editor, joins us out of London. And I'm looking at the markets, like Tesla's up a lot. And one of the logics appears to be that the domestic EV makers in China, BYD included, are showing really strong data. And so we might be extrapolating out that Tesla does well there, even overall, we expect this kind of continued deceleration in growth.
also maybe chalk this up to, if Keith Gill is back in the headlines, maybe, one of the ultimate meme stocks is benefiting from meminess. And because really when you look at the fundamentals of this business, I mean, just one analyst after another has come out with a report, dialing back their expectations for this quarter's deliveries. We do see, monthly wholesales data out of China that has not been strong for Tesla in the first couple months of this quarter. So I think, the likelihood of a surprise, last month that sort of rescues the quarter for the company seems fairly remote. So, it really is a head scratcher. I think, beyond just the sort of, presence of ebullience among retail investors, maybe just also looking ahead to the robo-taxi that's coming out and that unveiling in August.
It does feel like investors are wanting to go more long-term viewpoint on this stock because the medium to short term is looking pretty ugly, Craig. And we're running out of excuses. You've got a great story out from the team really talking about 441,000 EVs being sold for the second quarter. Look, we can't blame Middle Eastern supply chain disruptions anymore.
Right. I mean, the company has, point to things in the first quarter that really affected, more so the production side. And it was sort of reluctant to really speak to demand issues. And that's been, sort of Musk's MO. And to his credit, for years, he was proven right that he had, plenty of demand to work with, and that was not the company's problem. I think, we see more and more evidence, by the day that this is a company that does have demand issues, that, does have a bit of a tired lineup at this point and has a lot more competition to contend with. It is still the case that the Model Y does incredible volume, but it's really tough to build on a year when that was the best-selling vehicle in the world, and it's only gotten another year older. This was a vehicle, after all, that debuted in the year 2020, and so generally around this time you see a refresh, which Musk has sort of ruled out. So what exactly this company does to sort of touch off that next era of growth really still kind of remains to be seen, because I think the expectation is that the robotaxi is more of an idea and a concept as opposed to something that for the here and now and really the fundamentals of the business.
We get those fundamentals tomorrow. Craig Trudell, thank you so much. Meanwhile, coming up, we're going to dig into the private side of the market. We're joined by IVP General Partner Tom Lavero to discuss current investing trends and basically, are we out of the woods? Are we back to all risk on for CEOs right now? We're talking the state of the software economy. Ed, what are you watching?
Oh, I've got some drama. I've got some activist drama. Take a look at Massimo, health tech, wearables. There's a regulatory filing out where basically the CEO of the company is saying that if an activist, which is Politan Capital Management, takes control and tries to remove CEO Joe Kiani, the COO says, I'll resign. And as the headline of that chart shows, a lot of the staff seem to agree with that position. A drop of 7.6% is its biggest decline in 8 weeks. But interesting, we have another activist situation on our hands. And on this program, we like to track those. Stick with us. We'll be right back. Bloomberg Technology.
Let's talk artificial intelligence. K Health has just raised $50 million in a funding round led by Claro Group. Now, the startup provides patients with a chatbot to make primary care basically more accessible. And the recent funding round has set the company's valuation at about $900 million. K Health co-founder, CEO, Alon Bloch, joins us now. And Alon, I love the piece that we have from Marcelo Clary, basically saying, I'm so done with the hype around AI. I want to see companies using it, fixing a world problem. He says you're doing it. How are you doing it?
Well, we decided to focus on a big problem called primary care. That's the access to healthcare. There's about 1 billion primary care visits a year in America. People have chronic conditions, they have preventative needs, and they have acute care. And we built software that allows you to engage with patients and with your electronic medical records and with doctors, and it allows doctors to focus on making the decisions and engaging with patients. That's really, really tough to do. You need to build a lot of intelligence into the system. But that allows health systems to now integrate AI and clinical AI in their day-to-day, in their primary care. For example, we're integrated into Cedars-Sinai, so we can manage you remotely with primary care, but we can also integrate you into specialist test labs in a world-class health system.
Now, people will recognize you because you're a co-CEO of Wix. You're also co-founder, CEO of Vroom. You've been there, done that, taken companies public. I'm interested as to this particular problem that you're trying to solve. How are you seeing the efficiency gains? How are you measuring your success at this earlier stage, other than being able to raise funds?
I think that's a great question. I think the main focus always needs to be on quality. It needs to be better quality. And everybody always complains about healthcare. It's so expensive. It's so tough to be in front of doctors. So there's three things we look at. First is quality. B, can we make the doctor's life easier? Do they need to spend much less time collecting information, organizing it? Imagine having this really smart resident there who prepared everything there. Now the doctor can come in, can focus on the judgment, can focus on the patient. So you're saving a lot of time. The productivity improvements are large. And then there's also access. We provide it 24/7. Just like you'd want to get from your health system. And it needs to be grounded in your electronic medical record. We need to be able to provide you personalized medicine. So you need to bring all those pieces together, and they need to go hand in hand.
Alon, critically, the point with K-Health is that the diagnosis, treatment, or onward referral to a specialist is still determined by a human being. But are you able to share any data about the sort of success rates of treatment by using the platform and then having a means for a doctor to say, okay, this is the patient before me, this is the information I have available, this is what we're going to do?
Well, we can see everything anonymously that the doctor does, and we can learn from it. Bear in mind, the doctor, new things could happen, new symptoms can appear down the road. Sometimes doctors change their diagnosis. So yes, you're right, the doctors are making the diagnosis and treatment decisions. But we're letting doctors essentially have a co-pilot that does a lot of the basic work, but also some of the nuanced insights that can help doctors make decisions. And then we have this look back, the ability to look at outcome data and see the patients regularly. When you work, for example, in Cedars-Sinai, where we're integrated, you are getting an aside primary care just like anywhere else. It's just 24/7, and you can manage this directly, and you can get, again, the prescription, the referral, anything else you'd expect and need, but now you have just much more convenience, and all you need is your insurance.
Alon Block, K-Health CEO. It's an interesting case study. We are hearing it more often, this kind of service in the healthcare industry in the United States. Thank you for your time. Let's keep a conversation going and discuss trends in the world of venture capital and VC-backed startups, the macro environment's impact on startups, and a lot more with returnee to the show, IVP General Partner Tom Lavero. You know, it seems a strange place to start, but quite a lot's changed since you were last on the program, a lot of it driven by AI. The economy has changed, and we are bracing for a presidential election. This country in Europe, something similar is happening. How's things going?
It's been a rough couple years for startups.
That's a nice way to start the conversation, Tom. Thank you.
It's the truth. That's my job. Get out there in front of founders and tell them how it is. It's been a rough couple years. There's been a lot of startup shutdowns, layoffs, but things are changing.
You have been, as you do regularly, penning your thoughts, posting kind of thought pieces to social media. We've taken one from LinkedIn, for example, and you're arguing it's time for offense. So no matter how bleak things might seem, you seem to believe that it's time to fight back if you're a startup or a founder.
Founders need to anticipate where things are going, and I firmly believe right now the winds are shifting and the economy is getting better, and startup founders can't wait for the economic data from 12 months ago to decide to try and beat their competition, grow a little faster, hire more people. I think right now is the perfect time.
Tom, you like putting your thoughts, as we said, to social media, and previously you were calling for a mass extinction event. And so we kind of got to rate the wisdom with which we should see your current viewpoint with how it turned out in 2023, 2024. How was that mass extinction? Did it bear in the way that you thought it would? Did companies manage to succeed and muddle through more than you anticipated?
Yeah, I think that piece really resonated with the founders in the startup ecosystem because we were able to express something out loud. A lot of them were thinking privately. And if you objectively look at the data from the past couple of years, startup shutdowns are up between 3 and 10x. layoffs are a huge multiple of what they were before the zero interest rate environment. By every measure, it's been a startup extinction event out there.
But some companies have done well. Notably, some have actually managed to sell themselves. One of your own portfolio companies, HashiCorp, being bought by IBM. What's interesting is we're hearing more and more in the AI sphere, the companies are looking for mergers. They can't always sustain themselves. Are you seeing that among your portfolio companies, that they're either able to buy others, or we're seeing more M&A within the private markets?
Yeah, I think M&A feels like it's beginning to warm up. The big acquirers, the major public companies seem to be putting out feelers, starting conversations for the first time in a while. I think that's because startup expectations are more reasonable than they were during that zero interest rate environment. But their stock prices, frankly, are back up. So they're feeling a little bit more confident about acquiring smaller startups that are probably not profitable. And then now they have a real reason to go and make acquisitions, which is AI. There's this platform shift they know they need to be part of, and the startups tend to move faster in that realm.
Reading your work, I am going to channel my inner Tom Keene, long-time story Bloomberg anchor. And it's like Darwin and Wallace, natural selection. You're basically saying between 2020 and 2023, things were very bad. But actually what happened was good startups survived, the others were all killed. So that's a nice market to have. You only have good things in front of you, basically. Is that fair?
Yeah, I mean, listen, if you can have money and a good business during a downturn, it's the best time to build. But I think founders sometimes lose track of where we are with the economy, a little bit of like Stockholm syndrome, where you get so used to being in a down economy, you forget to go on offense. And that's what the latest piece is about. It's, hey, founders, the economy really is better. It's okay to start thinking aggressively again. Don't go to the extremes of burning way too much money and being efficient. But let's think about offense again, because startups naturally need to be on offense. If you're not, somebody else is.
Tom Navarro, we thank you so much for coming back on, IVP General Partner and all things offense. Let's talk chips, because SK Hynix is the semiconductor arm of the SK Group. It's planning to invest close to $75 billion through 2028, underscoring the conglomerate's bet on a sector that it considers crucial for future-proofing its businesses. Now, the group says about 80% of this sum will be allocated to investing in, you guessed it, your favorite, Ed, high bandwidth memory chips. What are you looking at?
Qualcomm has become the new front of shirt sponsor for Manchester United Football Club. This, the company's latest attempt to boost awareness of its Snapdragon brand among consumers amid a broader push into personal computing. And here to not only discuss this massive commercial deal, but also demonstrate it, is Bloomberg's own Ian King, who leads our semiconductor coverage and just so happens to be a Manchester United fan. But there it is. You know, it's something that you just didn't think you'd ever see. But for Qualcomm, this is a big, big deal.
Right. So this is not even just the company name. This is their brand. This is them trying to do something that they've really been trying to do for 10 years and not making a lot of progress in. And now they're saying, look, this is how committed we are. This is what we're prepared to put money behind. And obviously, this is a very big brand.
How much money are we talking, Ian?
They won't, neither side will tell us, but we have a report saying about $75 million a year, and it's going to probably stretch over 5 years.
Director Alice, you know, I'll just try and get this. I hold up for me. There you go. Yeah. I mean, the point is that it's a chip. It's a semiconductor, historically, that Qualcomm's put into smartphones. There's an AI story with it now. There's a cult following around it.
Right.
Just explain its next iteration.
Yeah, I mean, the most important thing here is they've been trying to get their chips into laptops for a long time. Hasn't really happened. Now they're saying new AI software will help them to do that. But what's happening behind the scenes, the kind of giant elephant in the room here, like Manchester United in the 90s, a very successful team, is Intel. Intel have dominated this market, not only with their products, but with their brand, right? That anybody who's trying to get into laptops has to take on the Intel Inside brand, and this is what Qualcomm is trying to do with this and other efforts.
just that word takes me back to the Beckham documentary, and when all the feel-good factors around, whether it's England, whether it's Man U, I mean, I think Eric Cantona's had something to do with the marketing of all of this, Ian. And just how many of these tech names or US tech names are going into sports like this to big up their name? How much do you see chips more broadly get into the world of football or soccer?
Yeah, I mean, it's a ingredient brand, so it's always been sort of a one step back. Intel were the ones that really broke that with the Intel Inside campaign and really pushed the idea that, hey, you don't buy something for the company that makes it, you buy something because of what's inside it. And Qualcomm are trying to make that next step. They're the first. We've seen other companies sort of flirt with this, but this is probably the biggest effort we've seen so far to really get a content brand, a content sort of product in front of real consumers who ultimately be the ones that
Qualcomm's saying that one Premier League home game will have the same value to them as spending on a Super Bowl ad. That's what we're talking about. Bloomberg's Ian King, incredible reporting. Thank you. I just got back from vacation, and when I was in Europe a couple of weeks ago, I noticed that in the midst of celebrations around the UEFA European Football Tournament, something else is part of the landscape, Karen. That is Chinese technology companies being sponsors. EV maker BYD, AliExpress, Alipay, and it's in this era of increasing tech competition between the US and China. I just was so surprised to see these names so present on the football broadcasts from the BBC, ITV in Europe. I was in mainland Europe looking at continental Europe. What do you make of that?
So what? Previously it was crypto names all sponsoring shirts. Now it's chips, and it's also Chinese e-commerce. But just the amount that they're spending, Ed, here, how much do they need to build on the app downloads to be able to vindicate the sort of marketing spend on a UEFA game?
So this is definitely about going after the European market, but the interesting comparison is Temu. Remember Temu did a lot of ads around the Super Bowl in 2023. They saw a massive surge in downloads of their app and then activity in that market. So you look at AliExpress as an example, they're clearly hoping for the same. BYD, the door's closed for them here in the United States, but in Europe, 1% of the EV market, there's a lot for them to play for.
So who have they been sponsoring, Ed? Which games were you shouting at the TV in a bar or a pub or at home?
That's what's so astonishing. All the games, they're in the live broadcasts of all the games, irrespective of which German, Italian, French, UK broadcasts you watch. But when I got back, Fox Sports has the rights to the Euros here, and you can still see them through that as well. So it is everywhere.
Well, they want to be omniscient, omnipotent. We do it all here on Bloomberg Technology, particularly sports and tech. We thank you. That's it for this edition of Bloomberg Technology, though, Ed. We didn't get to talk about Chelsea.
Incredible amount of breaking news as well, so there's a lot to recap. Do so on the podcast. You know exactly where to find it: Apple, Spotify, iHeart, and the Bloomberg platforms. From New York and San Francisco, this is Bloomberg Technology.